Silicon Valley.
Silicon Valley.
Silicon Valley.
Silicon Valley. Silicon Valley. Silicon Valley.
Silicon Valley.
Silicon Valley.
Silicon Valley Bank.
Silicon Valley.
Silicon Valley.
Silicon Valley Bank collapsed on Friday, and authorities seized.
Our own Deirdre Bosa has some fresh reporting on the Silicon Valley Bank collapse. Deirdre.
Its rate hikes are front and center as financial regulators figure out how to manage the fallout of the Silicon Valley Bank failure. Goldman Silicon Valley Bank.
Silicon Valley Bank. That leads us to our talk of the tape as we look at yields there.
No stock has been hurt more than SVB Financial Group today. The shares.
The collapse of Silicon Valley Bank shocks the entire world. Are we facing the biggest global economic crisis ever? If you're in the tech world, you've likely heard of Silicon Valley Bank. They had a lot of money saved up, but not many branches, and mostly served startups and tech companies. However, things have taken a drastic turn. The people who regulate banks have closed down Silicon Valley Bank, making it the second biggest bank failure ever in the US. In this video, we'll explain what went wrong with Silicon Valley Bank and how this will affect the tech industry and other areas. So get ready to hear a shocking story about a bank's collapse and the impact it will have on the world. However, before we begin our video, we would greatly appreciate it if you would subscribe to our YouTube channel and also press the bell icon. Let's get started. What is Silicon Valley Bank and how big is it? What is the story behind the fall of Silicon Valley Bank? The bank was founded in 1983 in Santa Clara, California, and became a vital player in the rapidly growing tech industry. By 2021, the bank was claiming to be the primary bank for nearly half of all US venture-backed startups, as well as having partnerships with many venture capital firms that financed those startups. Silicon Valley Bank saw itself as the financial partner of the innovation economy, a title that worked well during the good times but proved to be its downfall when the tech industry struggled. Despite having over $200 billion in assets, Silicon Valley Bank's collapse marked the largest bank failure since the Great Recession and one of the biggest bank failures in US history. It's worth noting, however, that Silicon Valley Bank's assets paled in comparison to those of larger banks like JP Morgan and Chase, which has over $3.31 trillion in assets. What led to the collapse of Silicon Valley Bank? Several factors led to the collapse of Silicon Valley Bank. Most of Silicon Valley Bank's clients include tech and venture capital companies, in addition to executives for these firms. In an effort to attract clients, Silicon Valley Bank offered relatively higher rates on deposits compared with many larger rivals. To help fund these higher rates, Silicon Valley Bank bought bonds in prior years when it was cash rich. But that was before the Fed began aggressively hiking rates and the venture capital market experienced some turbulence. The value of most of those bonds Silicon Valley Bank purchased has declined substantially, resulting in big investment losses. Complicating the situation, Silicon Valley Bank kept a lower level of deposits on hand and invested a greater percentage of its capital in order to try and pay its relatively higher rates. Consequently, Silicon Valley Bank has been on looser footing than most other banks. Additionally, some have speculated that Silicon Valley Bank developed a reputation for having not as strict lending standards. It is speculated that the quality of loans to some risky venture-backed companies with deposits at Silicon Valley Bank has deteriorated over the past year. Many of those firms have come under significant financial pressure as rates have risen, and securing capital has become more difficult compared to the low interest rate environment from just a couple of years ago. After Silicon Valley Bank announced recently that it lost $1.8 billion in asset sales, the bank failed to secure additional investment capital, and many customers rapidly withdrew deposits. Everything culminated with Friday's seizure by regulators. What are the implications of Silicon Valley Bank's collapse? The tech world is reeling from the shocking collapse of Silicon Valley Bank. Panic and chaos ensued as many investors and companies attempted to withdraw their funds from the bank before it was too late. Sadly, their actions only fueled the bank's downfall. However, not everyone was able to retrieve their money in time. Customers who had more than $250,000 deposited in Silicon Valley Bank are now left in a precarious situation. This unprecedented situation has caused a ripple effect throughout the entire banking industry, with fears that other banks may follow suit. The question on everyone's mind now is, what will be the fallout of this catastrophic event? Could this happen to other banks? While the failure of SVB is certainly concerning, it is important to note that it is an isolated incident and not indicative of a wider trend. Most banks and financial institutions are well capitalized and able to weather economic storms. However, it is always important to be vigilant and keep an eye on the stability of the banks and financial institutions that you work with. What can be done to prevent bank failures? There are several steps that banks and financial institutions can take to prevent a collapse like SVB's. First and foremost, it is important to maintain a strong balance sheet and not take on too much risk. Additionally, banks should maintain sufficient levels of liquidity to be able to meet depositor demands. Finally, banks should be transparent with their depositors and investors about their financial position and any risks they may be facing. By being upfront about their financial health, banks can build trust with their clients and mitigate the risk of a sudden collapse. If you've already watched our video on the Credit Suisse, you'll know how devastating bank failures can be. And now, Silicon Valley Bank has suffered the same fate, causing major upheaval in the tech and banking industries. Even though it was a regional bank serving a specific group of customers, its downfall has highlighted the importance of responsible financial management and risk evaluation. As technology continues to transform the world, it's vital for banks and businesses to keep up with changes in the market and adapt accordingly. We hope this video has provided valuable insights and analysis on the collapse of Silicon Valley Bank. If you enjoyed it, please consider subscribing to our channel for more informative content.